if you want to start a franchise, a Subway franchise costs 75,000. A Chick-fil-A franchise costs 250,000. That's not including all of the materials that you have to buy in order to sell the product. That doesn't include any of the expenses. So day one, you're in the hole. Here, when you start this business, we even pay for the course for you to get licensed in life and health. That's a $200 fee out of the way, right? All you have to do is pay for your license. You have to pay for your testing, and you have to pay for your E&O insurance. Then after that, the biggest expense that you're going to be able to have is buying leads. And that's the fastest way to do it. Now, let me talk about the leads. The leads, you can buy 50 cents a piece, all the way down to 50 cents, all the way up to $50, right? And anywhere in between. It's up to you to work those leads. And if you have enough confidence, you can work any lead type you want. I had a brand new guy on Sunday, just got his writing numbers. He bought the dollar bronze social media leads and literally booked 3 appointments. Had no idea what he was doing. No idea. He booked 3 appointments, okay? And out of those appointments, you know, if you have more time and less money, buy the cheap leads. If you have less time and more money, buy the more expensive leads, right? If you buy the $50 leads, they're going to be exclusive to you. They're going to come right to you as soon as they fill out that form. Nobody's talked to them before. Nobody's touched them. Nobody's even called them. They're now interested and hot in life insurance, right? So say you buy 10 of them, it's going to cost you $500, and maybe you get a hold of 5 of them. Out of those 5, you may book 3, 4 appointments. Somebody that's experienced may help all of those families, may help 3 of those families. Somebody that's new may help 1 family. But they're so hot that it's almost impossible to say the wrong thing. If you help 1 family, you'll probably get paid $1,500, roughly, maybe more, maybe a little bit less. But if you spent $500 to make $1,500, that's a 300% return on investment, right? So it's not ever the type of lead that you buy. You just have to get used to one type of lead and work that lead until you master it. Then try something else. If you want to work final expense after you get good at mortgage protection, try that, mix that into there, right? But you're going to have to spend money to make money. And you get to write all of that cost off when you go to pay your taxes. You know, it's a huge expense that you get to write off. You don't have to pay taxes on that, right? So my advice to you, I started the same way, guys. When I started, I didn't have any of the CRM that we have now. We had this little place called Cherry Pick Leads, and it was red and black, and you go in there and you just buy leads, and half the leads didn't even have phone numbers that worked. Now, if you get a phone number that doesn't work, you can go into the ILC and click on request credit, and they'll give you a credit for the phone number that doesn't work. And I literally I told myself, this is how I did it. I told myself, I'm going to work for 4 hours and then take an hour break. And sometimes I would work for 4 hours and take a 10-minute break. Out of those 4 hours, I put the blinders on. You know, if you think of a racehorse, they have the blinders on. The reason why is because now they can't see out here or out here. They can only see what's right in front of them. There's no distractions. They can hear the horses coming up on the side, and that pushes them to move ahead of them because they want to be ahead of them, right? But if we put the blinders on and focus for 4 hours at a time, I would always set a goal of, look, by 2 o'clock, or, you know, let's say I started at 9 a.m. I'd say by 11 o'clock, I'm going to have 5 appointments set. I'm not wanting to set 5 appointments. I'm not going to set 5 appointments. I will have 5 appointments set by 11 a.m. It's a different mindset. No matter what, I'm going to set 5 appointments, and I'm going to do the best I can to keep them on the phone until I get that appointment set, right? And once I get that appointment set, now I can move on to the next one. I'm calling efficiently. I work 25 leads at a time. I call them 3 times a piece, every single one of those. If they don't hang up, or I'm sorry, if they don't answer the phone, I'm not texting them, I'm not emailing them, I'm moving on to the next call right away. You want to maximize the talk time on your phone. Obviously, depending on the type of leads that you buy, you may hear the dial tone a lot, right? Ringing and ringing and ringing and ringing. But the purpose of us dialing 3 times in a row is because not because we want to set the appointment, it's to get them to pick up the phone, right? And if you go through all 25 leads and and some people pick up the phone, then guess what? After those 25, you go right back to lead number one again. Lead number one, call it 3 more times, all the way through to 25, then go right back to number one again. Call all the way through all 25 leads. Now, if you choose, you can start texting and emailing after you've dialed them 9 times, okay? Now, it doesn't matter if you buy 25 leads or 100 leads. I would suggest you buy 100 leads at least per week. 100 leads per week. And you have to do it on a consistent basis. If next you buy leads on Sunday, next Sunday you still haven't gone through all your leads, buy 100 leads. Doesn't matter if you've gone through them all or not. Buy 100 leads. And the reason why is because you want to have fresh leads all the time. And if you start building up on leads, guess what it's going to make you do? It's going to make you start focusing on getting those leads either a yes or a no. Right? You want to work those leads as fast as possible, as efficient as possible. If I got to go pee, I'm going to go pee real quick, jump right back on the phones, right? You want to get dial until you get all of your appointments in. Okay. Once you get 15, the whole goal is 30 appointments a week minimum, Monday through Saturday. If you can get 30 appointments a week minimum by Thursday, let's say you're running appointments on Thursday, you got 5 appointments and one of them no shows, book some more appointments. Take that time and book more appointments, right? Because the more you do, the faster you're going to go up in the scale, the more commission you're going to make because you're going to raise your commission and you're going to qualify for the Cancun trip, right? So the more money you make, the easier it gets. The more activity you make, the easier it gets. You take massive imperfect action. Fail forward because that's the only thing that's going to teach you, right? And when you dial those appointments 3 times in a row, here's the theory behind it. If you think of the client on the other side of the phone, what's happening? Well, first off, let's say you have 100 leads and you go through all 100 of them. By the time you get from lead 1 to 100, it may be 2 days. If the next day rolls around and you're now dialing that number again, that person's going to say, oh, I saw that number yesterday. That's probably a telemarketer. Block. But if you work 25 leads at a time and dial them 3 times, then 6 times, then 9 times in one day, by the time you start over back to 1 again, it's going to be an hour and a half. You go through those. By the time you start over to 1 again, it's going to be 3 times since you dialed the first time. And that person on the other side of the phone is going to say, you know what? That number, I don't know that number, but they've called me 3 times earlier this morning. Then they called me at like 12:30 3 times. They're going to pick up the phone and say, who is this? Now you got them on the phone. Now you can do whatever you possibly can to schedule that appointment. I had a guy today that answered the phone, and this is exactly what I said. It was an IUL appointment, and he's like, I don't remember his name. I think his name was Charles. I said, hey, Charles. He's like, yeah, who is this? And I said, real quick, I don't have time to get into it right now. I know you had just filled out that form requesting the information on the IUL. I'm just calling to set up a time to go over that because I'm in between appointments right now. Yeah, I'm at work. I can't talk right now. Perfect. I can't talk either. What time do you normally get back in the door from work? I get home about 5:30. Perfect. I don't have anything today because I'm super busy, but I do have a 6 o'clock tomorrow. I can squeeze you in at. Does that work for you? Yep. Okay. Please have a pen and paper handy. I'm going to go over some important information that you're definitely going to want to write down. Okay. Yep. I got to get back to work, he says. I said, perfect. No problem. So my point is like every call is not going to go exactly like your script. It's not going to be perfect, right? But you have to be the one to think outside the box to get that appointment set. Because in this day and age, wherever the leads come from, sometimes they think that they're a scam. So you have to help them understand by thinking outside the box and not acting like a telemarketer, to help them understand that this is really, really who, they sent the form into, somebody that can truly help them, right? So, okay, so that's all I have to say about the leads. Let's do this. Your hand up, Jeff. You got
And
a
I,
question?
yeah. Well, I'm just trying to understand. You said buy 100 leads a day. That's
A week.
500. I mean, oh, a week. Okay, gotcha. All right. I was gonna say, how do you dial 100,
You gotta
500
Yeah,
be a
leads a
baller.
week?
You gotta be a baller to buy 100 leads a day.
yeah.
I know. So
So back in my day when I first started, we were doing a lot of in-home. Okay. So on Mondays, we would call it dial day. And Tuesdays and Wednesdays, it would be run appointment day. Thursdays would be dial days. You set appointments for Friday, Saturday. So we would try Monday, we would dial and set 15 appointments for Tuesday, Wednesday. Thursday, we would dial, set 15 appointments for Friday, Saturday. And we were told to buy 100 leads every dial day. And that's what I did. I did exactly what I was told to do. I hardly ever went through all of my leads, but I kept dialing and they were all fresh to me, or I kept buying. Go
another
ahead, Jeff.
question on that. Sorry. So
All
you
right.
said something also, don't text them until after you call them like 9 times. So are you referring to both like new leads or old leads? You know, you say you buy a bunch of those old leads and just throw them into your automation, or is that just new leads? You say you don't put them in a text campaign until after you dial nine times.
So it's up to you. So I have a CRM. Some of you don't. I don't know what happened to my camera there. Sorry about the
You gotta
little.
clean. You gotta clean your camera. Maybe it
Well,
got
we just,
blurry.
anyways, I don't know what happened. Anyways, if you have a CRM, put them in there. Even though the CRM is texting them, let it do its job. Then you don't have to text it at all, right? But if you don't have a CRM, you don't want to spend your time texting because the chances of them responding on the first text is super small. You want to spend your time dialing that number. Now, if you've dialed them 3 times in a row, went through the 25, 3 times in a row, went through it again, 3 times in a row, and that's the ninth time, send them out a text. And if you do the mortgage mailers, what I like to do is send out the mortgage mailer, a picture of the mortgage mailer with my text. Okay, so that way they can. Let me turn this off, turn it back on, see if it works. And so, oh, there we go. That's like magic. Wow. so the so if you do the mortgage mailers, you can download the template, take a picture of it, and then text it after the ninth call with that question or with that comment that you make, right? And you could just use the same thing as a text message. Hey, Paul, this is Sean. Just getting back to you. It looks like you sent in a request for the mortgage protection insurance. This is the type of coverage that if something were to happen to you, it pays off your mortgage. Is that what you were looking for, or were you looking for something different? Leave it wide open, right? And if you text them that, leave it wide open, give them a way out. A lot of times they're more likely to respond because they know you're not a salesperson,
And
right?
you're triple dialing. How long do you wait between calls before you wait like 10 seconds, call again, 20 seconds? You just go do it
No,
right away.
I'm dialing right away. Now, sometimes, that being said, Jeff, I've experimented with I'll dial 2 times right away and then I'll wait 10 seconds to dial again. That way they know that I'm not a machine dialer, right? So I've experimented with that. That does add 10 seconds to your dial time each time you do that. And the whole point is to be as efficient as possible and maximize your talk time, right? Now, here's the other thing I want to bring up since we're on that point. Remember, I told you I used to do 4 hours. After 4 hours, I need to give my brain a break. And they say that that's best for you. to, focus hard for 4 hours. It's called deep focus. And then after 4 hours, you really only need 10 minutes. But if you're going to do a lunch for an hour and make sure you're back dialing, right? But when you take a break, don't think about anything that has to do with life insurance. Think about something else. Think about the future. Don't think about dialing. Don't think about this is what I'm going to do. Think about something else. Put yourself in a happy place. Put yourself in a mindset of where I want to go. Get yourself excited and psyched up about where you want to go. Don't think about dialing. Relieve that brain power for actually dialing. Then once you get on and start dialing again, get excited about it, right? Be super excited about helping families. Set a goal and say, look, I'm going to work until 1 o'clock to 5 o'clock. I'm going to set 5 appointments by 3 o'clock, no matter what. Okay. When you start doing that, things are going to change and you're going to set more appointments than what you think you will. And it's just going to rattle out your mouth, especially if you've practiced your script and memorized it. So, okay, we're already 25 minutes in. I wanted to go through a full presentation on this. So, Hytham, are you there? You're muted.
Yeah, I'm here.
Okay, can you be my client?
Do I have to buy a policy?
Yes, you do.
Okay.
And I'm going to use Americo because I'm going to jump into Americo's app. So you can give me, I wanted to choose you to do it, Hytham, because you're probably the most experienced on this call. No offense to anybody else, but I know you know some more objections than what other people would give. So I want you to give me some objections, but ultimately, you're going to buy a policy, right?
Okay.
That's the whole purpose of doing this. So let me set the appointment and then I'll call you back and then I'll run the appointment the whole time. Okay.
Okay.
I'm going to share my screen so you guys can see how I fill out the financial inventory. By the way, hey, let's give it up to Jeff Ricks. He created this new financial inventory. He updated it and this thing is fantastic. I've been using it and you'll see it on the screen here in a minute and everything is exactly what we need and it's in a spot where we can totally understand it. I still have to get used to using it because I'm used to jumping around from the old one, but everything is right there that we need to ask. And I'll share my screen and show you that. So, okay, first off, Hytham. Are you kidding me? Can you guys see it?
No, I'm still searching.
Oh, it is. Here, let me do this. I just fixed it. There we go. All right, cool. Sweet, sweet, sweet. Okay. So I'm going to set the appointment, Hytham, and then I'll call you back and we'll go full bore here. And if we go over a little bit on time, is that okay with you guys? Yeah. Okay. Yep. Perfect. So ring, ring. You're muted.
I was gonna say I have to get off I have a important call I have to go on at 12. So
Okay.
Yeah, I have an appointment at 3.
Okay. We'll do the best we can and knock it out quick.
All right, let's do it.
All right. Hytham, this is Sean. Just giving you a call back. It looks like you sent in a request for more information about the mortgage protection insurance. If you remember, this is the type of coverage that if something were to happen to you, you get hurt, sick, injured, God forbid, pass away, it pays off the mortgage and protects your family. Is that what you were looking for? Or were you looking for something different?
No, that's what I was looking for.
Perfect, perfect. Real quick, I'm just calling I can't go over your options right now. I'm kind of in between appointments here. I'm just calling to set up a time to do that. What time do you normally get back in the door from work?
I usually get off work at 5 and probably don't get home till about 5:30, 5:45, depending on traffic.
Okay. So what time does your wife usually get home?
My wife is gonna be working. This is gonna be coverage just for me.
Just for you?
Yeah,
Okay. And so I'm assuming you just want to protect her in case something were to ever happen to you?
correct.
Not a problem, not a problem. So you get home about 5:45. I don't have a 5:45. I do have a 6:15 though. Does that work for you?
Yeah, that should work.
Okay. Do me a favor, have a pen and paper handy. I'm going to go over some important information that you're definitely going to want to write down. And then if you can give me like a 15-minute window, maybe a 30-minute window. I have 6 appointments ahead of you, so I may be running late. But if I do get done a little early, I may call you just a tad bit early. Is that okay?
Yeah, that should be fine.
Okay. Perfect. Talk to you then.
Okay.
Ring ring.
Hello?
Hey, hi them. This is Sean, just giving you a call for a scheduled mortgage protection insurance appointment. Um, I'll just kind of jump right into it here. Let me ask you, what got you interested in the
I'm
mortgage protection insurance?
I'm sorry, I had a lot of people call. What are you calling for?
Yeah, remember I spoke to you this morning about the mortgage protection insurance. This is the type of coverage that if something happens to you, pays off the mortgage and protects you and your family. What got you interested in that?
Yeah, well, I was looking to, get some coverage to protect my wife, just in case if something was to happen to me.
Oh, okay. Okay. How long have you been shopping around for it?
I just started looking. I had looked before and put it up, put it to the side, but now I'm kind of more interested in it. So I'm kind of I'm just starting to do my research.
Okay. Now, so you've never had mortgage protection insurance before?
No, I have a burial policy, but not mortgage protection.
Okay. So you have a burial policy, but not a mortgage protection policy. Okay. And then how much life insurance do you have?
I have a $15,000. It's a whole life.
Now, is that something that you own or is it something that your work owns?
No, that's I own it.
Okay. What's the name of the company?
Mutual of Omaha.
Okay. Perfect. And then do you have anything else in place right now?
No, that's it.
Okay. Got it. Got it. Well, let me ask you this. I'm gonna, how much do you owe on your mortgage, by the way?
155,000.
155,000. Okay.
So I want to
And then,
ask you something. Can you just tell me exactly how this works a little bit? Because I'm kind of, I've talked to one other person, and they were talking about living, living benefits and cash accumulation. It kind of lost me with what he was trying to say. Can you just tell me exactly how this coverage works and what does it do?
yeah, absolutely. So if you were to get hurt, you were to get sick, you were to get injured, it's going to pay off the mortgage. Well, it could pay off the mortgage or it could pay half the mortgage. Just really all depends on what's affordable for you and what you qualify for. But what I'll do here is I'm going to just take 5 minutes to ask you some finance questions, ask you some medical questions. Then from there, I'll have an idea of which carrier may qualify you. Then what we need to do is get you in front of the carrier. Okay?
Okay.
Okay. In order to do that, what we do is we just submit a simple request to the carrier. All right. Now, do you have access to your email?
Yes, I do.
Okay, so what I'm going to do here is I'm going to send you over a copy of my license, and I'm going to have a picture of me, and then there'll be a picture of the carriers in there. Is that okay?
Sure.
Okay, can you check that real quick, see if that came over?
I got it.
All right, perfect. What do you see there?
I see a picture of a family, like a husband, wife, and a kid,
Yep, that's
and
me
it
and my
says book an appointment.
yeah, that's me and my family right there. Do you see my license right there in Michigan?
Yes.
Okay. That number right there called a license number is actually my social security number for my business. And so you have a little bit of personal information about me as well. You can verify that with the state of Department of Insurance with the state of Michigan. And then what else do you see there? Do you see that picture of all the carriers?
Yes.
Okay. So that, so I'm partnered with about 30 plus A-rated carriers nationwide. So what that allows me to do for you is shop around, customize something that best fits your situation and your needs, and most importantly, fits your budget. Okay.
Okay.
All right. So we got all the logistics out of the way here. I'm going to ask you these questions here. So I got a mortgage balance of 155,000. What's the value of the home?
370.
Okay. 370. Whoops. Okay, so if my math is correct here, you have about 115,000 of equity, right? That's
Correct.
pretty important to protect right there. What's your monthly payment?
1250.
And does that include your taxes and insurance, your pity payment,
Yes.
principal, taxes and insurance, so all of your escrow as well? Okay. And then when did you take out the mortgage?
That was about 15 years ago.
Okay, did you refinance since then?
No.
Okay, so you have about 15 years left on the mortgage, right?
Correct.
Okay, and so that was a 30-year mortgage at the time that you purchased it.
Correct.
Okay, perfect. Now the timeout. The reason why I asked this question, notice he's got a 30-year term and he's got a 15 years left on the mortgage. If I'm going to go with the term policy, the max he really needs is 15 years on the term. And the reason why is because that's all he has left to pay on the mortgage. After that, it's going to be paid off. Now, if he wants more coverage, you can draw it out to 20 years, maybe 30 years. But on a term policy, that's all he needs. Okay. So in order to keep it cheaper, sometimes we'll go down to 15 years instead of 20 years because I haven't found out his age yet, but the longer you go out, sometimes the more expensive it is, especially if you go out 30 years and they're going to be 85 by that time, right? So that's the reason why I did that. Okay, back into it. Do you pay anything extra on the mortgage to pay off the loan early or no?
No.
Okay, perfect. What's your height and weight?
5'11", 220.
5'11", 220. Okay. And then are you a smoker?
No.
Do you use any type of tobacco products?
No.
Okay, good for you. Have you ever done it or used any tobacco products in the last year?
No.
As you're vaping over there on our
Oh,
call.
well, you didn't see that.
Okay. What prescription medications are you currently taking?
Not taking anything right now. Just for high cholesterol.
Atorvastatin.
Atorvastatin for high cholesterol.
Okay. And then have you been prescribed any medications in the past 5 years that maybe you forgot about, or you decided, you know what, I'm doing pretty well. I'm just not going to take that anymore.
No.
Okay. All right. So just the atorvastatin.
Correct.
Okay. Let me ask you about some medical conditions. You tell me if this applies to you. Have you ever had a heart attack, stroke, mini stroke, or cancer?
No.
Any stents put in?
No. I really don't
You-
have anything. Don't have any medication. I do
Okay.
my regular checkup once a year.
So no diabetes, no high blood pressure, asthma, COPD, lupus,
No.
rheumatoid, nothing like that. No thyroid issues, anxiety, depression.
No.
Okay, kidney or liver disease, nothing like that, right?
Correct.
Okay, time out. Now, you notice how you're going to get clients like that. Nope, I'm really healthy. I'm super healthy. I don't have anything. But I still go through the medical conditions because there's a lot of times where they'll say, oh, yeah, well, I did have a thyroid problem, 6 years ago and it's not there anymore, right? Or yeah, I had cancer 6 years ago, but I don't have cancer anymore, right? So you
Correct. And
always
that's why you continued asking the questions, even though I told you that I'm healthy.
yeah.
You continued asking the questions, and that happened to me a month ago. I submitted an application for a client that told me he only had high blood pressure medication, uh, and they took him off of it. He was only on it for 3 months. I submitted an application, he got declined. I submitted another application, he got declined. I asked why. Well, he come to find out he had kidney dialysis started in December of 2023 that he did not mention.
Yeah. And
So
a
that
lot
you're
of
going to run into that.
you'll find out that the clients will lie to you because they want to try to get coverage. They think that they're going to slide by. So it's important to always ask the questions because otherwise you're filling out an application and they're going to get declined anyways, right? And
So
especially ones that you'll find that the ones that are easy clients,
Yeah.
your radar go up and you're like, okay, there's something up with this guy. He's probably had a heart attack yesterday or a stroke the day before and cancer throughout his life, right? But it's going to happen that way. Paul, do you have a question real quick?
yeah, I was just going to ask. So if that's the case, where you're kind of going through this and they're kind of just, yeah, no, I'm fine. Do you just maybe throw out the comment? Well, once we submit this application to qualify you, they're going to go through your whole medical background. So if just think back deeply, like, is there anything that you've been prescribed or any procedures that you've had that maybe you just didn't think of, just to let them know, like, hey, you're not going to get away with it. If it's on your MIB, it's on your MIB.
Absolutely. You can definitely do that. Yeah.
Okay.
I have no problem with that. Definitely do that because they're going to find out anyways. And sometimes I'll just tell them straight up, this is the part where you have to be extremely honest with me because they're going to find out anyways.
There's nothing wrong with asking questions, especially if you feel like there's a red flag. When you feel like there's a red flag, that's when you really need to ask more questions and get in depth about what they're saying.
Yeah, because a lot of times, even with the big carriers, especially IULs with NLG and F&G, if you lie on the application, sometimes they'll deny you right then and there, right? Deny the client. So you want to be first and foremost honest and do the best you can to help them be honest.
Now, Sean, I just want to get a quote.
Sorry, Sean, quick question, if I could.
So
The medical conditions on the financial inventory, are those just like the main questions that we need to ask, or is there an even more extensive medical conditions we should be asking off the cheat
those
sheet?
are the main questions that we need to ask. Those are the ones that if something were to deny them, those are the ones that are going to deny them. Okay. Okay, back into it. What did you say, Heather?
I just want to get a quote.
Perfect. Well, let me finish up this information here, and then I'll be able to get you a detailed number of what it'll cost. Have you ever had any hospitalization surgeries in the last 5 years?
No.
No? Okay. Has any family member, mom, dad, grandma, grandpa, died before age 60?
No.
Okay. And then, what do you do for a living?
I'm a hustler.
Hustler. Okay.
No,
What is a make per living?
I'm a mechanic.
Okay. Hustler.
Hustler mechanic.
And then monthly net income.
Around 9,000.
9,000. Okay. And
Do
then
you
are
want
you
the take home or do you want the before taxes?
take home, please?
9,000.
Okay. And then are you married, single, divorced, widowed?
Unhappily married. No, I'm just kidding. Married.
You are married. Okay.
Married. Yeah.
What's your wife's occupation? What does she do?
She's a nurse.
Okay. And then what is her take home income?
I don't know that.
If you were to take a wild guess, what would you guess?
Around 100,000.
A year?
Yeah.
Okay, so if we divide 100,000 divided by 12, That would be roughly about $8,300 a month, correct?
Sounds about right. Yeah, but she also picks up overtime and stuff like that, so I really don't know exactly how much.
No problem. We'll just estimate low and just say $8,300 a month. Is that okay?
Fine, that's fine.
Perfect. So if my numbers are correct, you guys between the both of you make about 17,300.
Correct.
Okay. And then okay, ballpark monthly expenses. Like if you were to add up your car payment, utilities, gas, food, obviously you have a mortgage payment here. What would that total monthly ballpark figure be?
Around 2,500. That's, I have a car payment and car insurance with the food, groceries, and bills. Around 2,500.
About 2,500 plus the mortgage payment?
Yes,
Okay. So roughly about 3,750 altogether with the mortgage.
that'd be 4,200.
Oh, is it? Okay.
Oh wait, no, I'm looking at my client's. Sorry, I'm looking at my client's inventory sheet, and I was basing
You're
that
my
off.
client. Let's be
Yeah, yeah.
real
I'm sorry.
here. 3,750.
Yep, 3,750 is correct. Yep.
All right. Sounds good. So if my numbers are correct, sir, 17,300 minus the 3,750 in expenses per month, you have about 13,550 left over per month. Is that correct? Does that
Correct.
sound right? Okay. All right.
Sounds about right. Yep.
So let me ask you this. Is there any 401, what do you have to offset the mortgage or act like life insurance if something were to happen to you? Do you have any 401ks or IRAs,
No,
stocks,
I don't have
bonds?
any 401k. I have a little bit of savings.
Okay, what do you have in the savings?
I have about 40,000.
About 40,000. Okay.
Mhm.
So just a side note here, as you probably already know, the banks make money off of that money sitting in there. They pay you like less than 1%. If I could show you a product that is not going to cost you anything, there's no cost, no fees, and uh, you have you have a guarantee that it'll never lose money. You can only participate in the gains, and it grows with the market, not in the market. Would that interest you?
Not at the moment. I'm just looking for something to cover the mortgage.
Okay, no problem. Well, I'll do this. I'll send you some information about it once we get off the call. It's called a fixed indexed annuity. It's kind of like an IUL, it grows, but you participate in the gains, but you don't participate in the losses. Okay.
Sure, I'll take a look at it.
Okay, sounds good. Well, let me do this here, Hytham. Um, I'm going to recommend a company called Americo. They've been in business for 115 years. They're based out of Kansas City, Missouri. Um, what is your date of birth, by the way?
12/16/76.
12/16/76. Okay, and then what zip code are you in?
48127.
We're 8127. Okay. So I'm going to recommend a company called Americo. They have can you guys still see my screen?
Yes,
Okay. What do you guys see?
the inventory sheet.
Oh, it's not sharing what I wanted to share. Let me reshare. Okay. Now do you see the Americo screen? Perfect.
Yes.
Okay. So I'm going to recommend a company called Americo. They have a two-part request form. Now, time out. Notice I call it a request form. It's not an application, right? So, okay. They have a two-part request form. What I'm going to do here is ask you some questions, and then they're going to have you sign a HIPAA form. You know what a HIPAA form is, right?
Correct.
Okay. It's just like when you go to the doctor's office, basically says that me, America, we can't share your information with anybody. And that's going to allow them also to take a look at the prescriptions that you're taking, even though you're not taking any, which is good. And then they're going to come back and they're going to tell us one of two things: either continue asking questions or decline. If they decline you, we're just going to pivot to another carrier. If they say continue asking questions, that's a good thing. That's what we wanted to say, but that does not mean that you've been approved. That just means that uh, they're giving us permission to submit a request to the carrier. Okay. Now, in this request form, they're going to ask for three things. They're going to ask for your ID to make sure that you are who you say you are and you're not taking out insurance in somebody else's name. That's not you, is it, Hytham?
No, that's not me.
Okay, perfect. The other thing that they'll ask for is your SOCH. They use that to check your MIB to make sure that there's no prescriptions or anything like that that is going to, scare them and make them think that you're going to die tomorrow. The other thing, at the end of the request, they're going to ask you for a financial institution or a credit union to be on file, not kind of like a routing number and an account number.
Well,
Okay.
Sean, I'm not comfortable giving you this type of information. That's very personal information.
Sure, I totally understand it. If you notice, when I sent you over that email, you took a look at my license. I'm actually licensed in about 30 states. All of them have done a federal background check and a state background check on me and made me send in fingerprints. And they checked me out so well, they did everything except for made me pee in a cup. So I can promise you that all carriers are going to ask for the same information. But don't worry, no money comes out today. Once you are approved, then at that point in time, then they'll take that first payment and then you're covered right away without having to pee in a cup, do a blood draw, or a medical exam. You don't want to go to the doctor, do you?
No, I sure don't.
Perfect. Perfect. Any questions on that?
No.
Okay. So I'm going to recommend a product called an IUL, an Index Universal Life. You ever heard of that before?
No.
No? Okay. So an IUL stands for Index Universal Life. It's actually a whole life policy. So this will cover you forever. It also comes with some riders to where if you get hurt, sick, or injured, it'll pay off your mortgage. And here's my favorite part: it grows cash value indexed with the market, not in the market. So, like your 401k is in the market, it goes up when the market's doing great. But when the market's going down, everybody's pretty upset that they got a 401k. Because they lose money, right? I have clients that are in their 60s that lost 15 to 20% in their 401k. The way an IUL works is that every portion of your payment that you make, every payment that you make, a portion of that goes to the cost of insurance. That's what gives you the life insurance, what gives you the living benefits. It's what makes it a life insurance policy, but it's also what keeps Uncle Sam's hands out of it from taxing you on your gains. So all the money that you accumulate over time that's indexed with the market, you get to participate in the gains. You don't get to participate in the losses. So when the market drops below zero, you stay stagnant. You don't lose any money. Okay. You get to keep all the money that you have. Now, the best part about it is you can pull out loans if you need to. You can decide to pay them back or not pay them back until you're dead. It's up to you. And when you pull out loans, it's all tax free. You like paying taxes?
I don't think anybody does. I
I
sure
agree.
don't.
I agree with you. So let's do this. Let's see if we can even get you approved for something like this. So what I'm going to do is just start asking you some questions here. And guys, just so you know, this is a dummy form right here. This is your demo app with Americo. So you can do anything in here and it's not going to do anything. Right now, I already know the price. Okay. Side note, time out. I already know the price. Am I going to give them the price right now?
No.
No. Because we want to get him vested in this, right? So I've told him about all the benefits here. I can always change this down the road, but I'm going to start the e-app. Okay, so I go here. Now here's all the questions. So I got your date of birth, Hytham as 12/16/75. You're in Michigan. I don't ever, like this right here, I don't have to ask him this question. I'm gonna just type in no, because I already know he's got a bank account. And the reason why I know that is because I told him that, they're gonna ask you for a financial institution or credit union file. And usually at that time, if they don't have a bank account, they will let you know that, okay? Now you can ask them if they have a bank account as well, if you want to be a little bit more secure about it. Okay, so hi them. You're married. Do you have a middle initial?
No,
Are you a junior, senior, second, third, or fourth?
just the first. Nope.
Just the first. The one and only, the original?
Yep.
Okay. And I got your height is 5'11".
Correct.
Weight,
220,
and social security number is 12345.
45. Yep. Please don't
Okay.
share that with anybody.
I promise you, I will not share that with anybody. In fact, everything gets destroyed once we submit the request. What state were you born in?
Michigan,
Okay. And then you're a citizen. What do you do for a living?
mechanic,
Oh yeah, you're a mechanic. And what type of a mechanic? Like a truck mechanic, a bus mechanic, automotive service mechanic,
diesel truck mechanic.
diesel truck mechanic. Okay. And then your annual salary is so you make 9,000 a month, times that by
108.
about 108. Okay. And then what's your address? 123 Main Street.
Yep. Michigan
Okay.
48127.
And then what city in Michigan?
Dearborn
Detroit.
Heights.
Huh? Oh,
Dearborn Heights. No, man, I don't live in the ghetto.
48. Okay. 48127. Okay. And then is your mailing address the same or different?
Same.
And you've lived there longer than 6 years, right?
Correct.
Okay. And then your email.
ELORR123 at gmail.com.
Okay. And then if you get approved, do you want the policy delivered to you or emailed to you?
Delivered.
Okay. And then what is your cell phone?
123-456.
Well, I'll just text you for real. What's your real
Okay.
phone number?
Oh, 313-787-9740.
9740. Okay. Now it's going to validate the insured. And then we move on. Okay, so that's been sent in, and it hasn't been sent in. I got to click this. Yep, he's the policy owner. Okay, so that's been sent in. As we're waiting here. Oh, it hasn't been sent in yet. So I'm on the next one.
You got the number right?
Yeah.
313-787-9740.
It hasn't been sent yet.
Oh, okay.
So right here on the additional funds for an IUL, I just usually do 50-50. So one of these is a point-to-point participation rate. The other one is a point-to-point with a cap. So sometimes the participation rate is going to do better. Sometimes the cap is going to do better. So if we do 50-50, they get best of both worlds. And you said you're not a nicotine user, correct?
Correct.
Have you ever used nicotine in the past?
Absolutely not.
Okay. Have you smoked marijuana in the last 24 months?
Absolutely not.
Okay.
No.
And then, okay, now I'm going to text you a HIPAA form to sign. Okay. And
Okay.
I'll explain it's there. Now, once you get the text message, there's a 6-digit authorization code in there. What I'd like you to do is just give me that 6-digit authorization code. I cannot see that on my side. By you telling me that 6-digit authorization code, that's your electronic signature to sign the HIPAA form. Okay.
Okay. The number is 044 228.
And the demo app shows you. So guys, time out. If you guys want to go through this demo app and put your own phone number in there, you can get the text message and see what it looks like on the other side. Okay.
Yep, I recommend you do that.
Yes. That way you know what it looks like and you can tell the client. Okay, so that's verified. Now what we're going to do is go through the health questions. Now this is the green thing that you want to see. Timeout. So if they're not going to get passed, it's going to pull up a big old yellow box and it's going to say, go to guaranteed issue. If it says that, you're going to have to pivot to another carrier. If you see this green box, that means that 99% chance they will be approved. I'm not going to tell them that. Okay. What I am going to do is I'm going to say, okay, I'm going to go through all of this first. And then what I'm going to do is I'll say, okay, have you, in the last 12 months, have you used a walker, wheelchair, electric scooter, supplemental oxygen, or catheter?
No,
Within the past 2 years, have you done any motorsports racing, boat racing, parachute, skydiving, hang gliding, base jumping, rock or mountain climbing?
no,
Okay. In the last 10 years, have you used heroin, morphine, other
no,
unprescribed narcotics, any illegal drugs
no,
whatsoever?
no,
Okay.
no drugs, no alcohol, no smoking, no nothing.
Perfect. No alcohol either, huh?
No, I'm straight as the arrow.
Okay. Have you been convicted or pled guilty to or currently awaiting a trial for a felony?
No.
Have you ever had a misdemeanor?
Not that I can remember, no.
Okay. And you're not on
Like
probation
currently? Do you mean like currently right now or prior?
ever in your life?
Yes.
Okay.
I was
Have you
16 years old.
incarceration, probation, parole, or other
No,
court ordered supervision for a misdemeanor and felony conviction in the last 10 years?
no,
Okay. Are you currently under, so you're not in probation or anything? Within the past 2 years, have you made any flights as a pilot or a student pilot?
no.
Okay.
Can someone
Within,
take over? I gotta call my appointment.
oh, you have an appointment right now?
Yeah, it's 3
Okay.
o'clock.
I'll take over.
All right, Jeff. Cool.
Okay, sorry guys.
All right. So within the next 2 years, do you intend to work, travel, or reside in Saudi Arabia, Afghanistan, Iraq, or Syria, Somalia, Sudan, or Yemen for more than 30 days, or outside the U.S. for more than 180 days?
No,
Okay. And you're not a member of the military, do you have a valid driver's license?
yes, sir.
Okay. In the past 2 years, have you been convicted, pled guilty, or entered into a plea agreement for driving under the influence of drugs or alcohol or reckless driving? Or have you pled guilty to or been convicted of 3 or more moving violations or had a driver's license suspended or revoked for any driving related criticism?
No,
Okay. Moving on. Okay. And have you ever been diagnosed with, received care or treatment for, consulted with, or been advised by a member of the medical profession to seek treatment for coronary artery disease, heart attack, coronary artery bypass surgery, angioplasty, stent placement, angina, valvular heart disease, cerebral palsy, cardiomyopathy, congestive heart failure, heart attack, congenital heart disease, stroke, mini stroke, abnormal heart rhythm, thoracic rhythm, or abnormal aortic aneurysm?
nope,
Okay. COPD, chronic bronchitis, emphysema, sarcoidosis, pulmonary hypertension, or cystic fibrosis?
nothing.
Okay. Any major depression, bipolar disorder, schizophrenia, Alzheimer's disease, dementia, memory loss, Down syndrome, autism, anything major like that? Any eating disorders, chronic depression, or any other nervous disorder?
No, I'm good on that.
All right. Any chronic kidney disease, end-stage renal disease, renal insufficiency, or any condition within the last 5 years that require dialysis?
No,
Okay. Any Parkinson's disease, sickle cell anemia, pernicious, Lou Gehrig's, ALS, muscular dystrophy, hydrocephalus, demyelinating disease, including multiple sclerosis, Huntington's disease, cerebral palsy, quadriplegia, or paraplegia?
No, I went to Huntington Beach. Does that count?
No, that doesn't count.
Oh,
Any liver
okay, I didn't know.
disease, failure, cirrhosis, or any form of hepatitis?
Nope.
Did you
Nope.
say no?
Yeah, nope.
Any cancer, leukemia, melanoma, or any tumor of the brain?
Nope.
Any connective tissue or autoimmune disorder, including rheumatoid or debilitating disabling arthritis?
No.
Have you ever been the recipient of an organ transplant?
No.
Ulcerative colitis or Crohn's disease?
Nope.
Epilepsy or seizure disorder diagnosed in the last 6 months?
Nope.
Sleep apnea diagnosed in the last 6 months?
No.
Mild or situational depression or anxiety diagnosed in the last 6 months?
No, I haven't.
Psoriatic or other inflammatory arthritis diagnosed in the last 6 months?
No.
Any disease or disorder of the bones or muscles which you had surgery in the last 12 months?
Nope.
Asthma for which you had daily steroid medications or for which in the past 12 months you had visited the ER or been hospitalized?
Nope.
Okay, in the last 2 years, any labs, diagnostic testing, or procedures completed with abnormal results or results that require additional or follow-up diagnostic testing or treatment?
Just like high cholesterol.
Okay. Any referral to another licensed member of the medical profession or facility for consultation or treatment that has not yet been completed yet?
No.
Okay. Have you ever been prescribed narcotics by a licensed member of the medical profession to alleviate a pain of a chronic condition that's continued longer than 6 months?
No. Nope.
Are you at the time of this application in a hospital or a medical or rehabilitating facility? No?
Nope.
Okay. In the past 12 months, have you been recommended by a licensed member of the medical profession but not yet completed any treatment, surgery, or hospitalization?
Nope.
Within the last 10 years, have you been diagnosed, received care or treatment for, consulted with, or been advised by a licensed member of the medical profession for diabetes in any form, including pre-diabetes or just elevated blood sugar?
Negative.
Okay. How about the same for high blood pressure?
No, my blood pressures are good.
Awesome. Awesome. In the past 10 years, have you been diagnosed or been tested positive for AIDS?
Yeah, I got AIDS, but I took some medicine and got rid of it. So I'm on it.
I'm going to say no.
Okay.
Within the past 5, now normally if he would say that, I would have to say yes. Unless it was after
You can't
10
get
years.
rid of AIDS. I don't think you can.
If it was after 10 years, we don't have to worry about it.
Well, I didn't know that. Okay.
Yeah. Within the past 10 years, have you been diagnosed by a licensed member of the medical profession or tested positive for AIDS?
Nope.
Yeah. So if he's been diagnosed 11 years ago, the answer is no. Within the past 10 years, have you been diagnosed or treated by a licensed member of the medical profession for specified symptoms such as immune deficiency, recurrent fever, unexplained weight loss, fever of an unknown origin, severe night sweats, unexplained infections or skin lesions, unexplained swelling of the lymph glands, Kaposi sarcoma, or pneumocystic carny pneumonia?
No.
Okay. Okay. What is your doctor's name?
I don't really go to a doctor, so I don't really have a primary doctor. It's been like 3 years since I went to one.
Okay. So what is the last place that you visited for a health condition?
Uh, Company or a place called Southwest Physicians.
Southwest Physicians. Okay. And then what's the address and phone number?
It's like 123 Southwest Street.
Okay. So side note, guys, time out. At this point, when he says a name, what I'm doing is Googling this name and the town that they're in, because you could probably find the address and phone number faster than they can. And so I'm just going to type in Google Southwest Physicians Clinic in Dearborn Heights, Michigan, and it'll pull up that exact name with the address and phone number.
But if they've never been to a doctor's, sometimes I get people who never went to doctors. Just can't put nothing in there, right?
Right here.
Yeah. Okay.
There's a question on there that you can answer. It says no physician.
Right here. But you want to put something in there. They have a higher chance of getting declined. Doesn't mean they're going to be declined, but they have a higher chance of getting declined if they've never been to a
Sure.
doctor. Okay.
Yep.
So even if you put in, if they go to an urgent care, put that in, right? I have gotten people approved with just putting an urgent care place in there.
Right, you're saying that they went to an urgent care in the last couple of years, or last year or whatever, 15 years? Is that what it was?
Sick or something. I've just put that in there. Yeah.
Well,
I put anything that is a physician's clinic in there, no matter what. And then we'll put the phone number as 402-255 or 7-8475. And then does the proposed insured have a personal care physician? Yes. Is it the same above? Yes. Now, if it's not the same above, you just click no. Or if they don't have one, you just click no, right? And then we move on to the next one. Now, existing insurance, this is where sometimes, I would put in there their existing insurance. Now, if you click yes, you're going to put in here what policy, will this policy be replaced? And if it says no, he's going to put in Mutual of Omaha. And then the contract number, if they don't know it, just click on unknown. And then who's the owner of the policy? By them, Allure. And policy was, when did he take it out? We'll just say 5/12 of 2019. Base amount 15,000. Accidental death benefit. Nope. And then is this an Americo policy or non-Americo? Non-Americo. Add policy.
The face amount is the death benefit, sorry, or it's, I forget.
What's that?
The face amount. If someone were to ask like, oh, what is that? That's the what they receive at the end, or that.
I'm sorry, I didn't understand your question.
Towards the bottom of the screen when you're filling out the face amount and you put like right there.
Oh, that's the death benefit.
Okay. Just wanted to double check. Thank you.
So he said when I did the financial inventory that his death benefit was 15,000.
Gotcha.
So for some reason it raised. So I'll put this in real quick. Mutual of Omaha. Contract is unknown. Item Allure. And we put 5/15.
recording this, Sean?
Yeah.
Okay, because I gotta go hop onto another Zoom call. Which one question real fast? I noticed in our training when we do the role playing, you said set the appointment, call them back, then you would do that financial inventory, and then you want to call them back a third time. But I noticed you just went straight into doing this.
This is a mortgage protection call, not an IUL.
I see. Okay.
Okay. And this is a simplified issue, so we're going to knock it out right away. Okay. Now, at this point in time where I select the beneficiary, this is actually where I stop, and I'm going to start building the value of the policy. And I'm going to say, okay, let me see here if if they came back yet. I already know they came back, but I'm going to go click this, just the drop down menu, and it's going to take me back to the product page, right? Now is the time where I'm going to build the value of the product, and I'm going to price condition them, and I'm going to give them a price of of what it's going to cost. Okay. And so who's going to be my client since you're leaving, Jeff? Hi, are you there?
Yeah, I'm back.
Okay. Your appointment no-showed, no problem. Or rescheduled, no problem.
No show.
Okay. So now I'm going to say, okay, Hylam, let me see if it came back. I'm going back to the product page. Oh, it looks like it came back. It says continue asking questions. Now I'm going to take it away. This doesn't mean that you've been approved. They're just giving us permission to submit a request to the carrier. So that's a good thing. Okay. But do me a favor, grab a pen and paper, and I'm going to
Okay.
have you write down the benefits of the policy. So this is where I have them write all of the benefits that I'm going to go over down. This part right here is called building the value. This part right here is where you sell the policy. Okay, this part right here is the most important part of this whole call. They need to understand that the value of the policy is way up here, way up here, and the price is going to be way down here. They're going to get more value for the policy than they're going to have to pay for it. And that's the whole purpose of this. And so what I say is, okay, Hytham, now you can do, I have some clients that do a full mortgage payoff. I have some of them that want more coverage because it grows cash value. And I have some of them that just want to do a half mortgage payoff. Okay. But we'll just start with a full mortgage payoff just to kind of give you an idea. So write down on your piece of paper, 155,000 face amount. And that's also the death benefit. Okay. So if you guys have a pen and paper, you guys can do this with us so that you can see what the client is going to see. So 155,000 death benefit, and that is that goes to, now who is going to be your beneficiary if something were to happen to you? I didn't even ask you that.
My wife,
And what's her name?
Jamie.
Jamie.
Yeah, you can use that.
Jamie Allure. Okay. So if you were to pass away, then Jamie's going to get a tax-free check for $155,000. Okay. So it protects your family if you die. Now, all these other benefits I'm going to go over with you are for you, Hytham, while you're still alive. Okay. So what I want you to write down is critical illness. And then right next to it, write down 155,000. If critical illness is if you have a heart attack, stroke, kidney damage, liver damage, cancer, any life event like that happens, you can withdraw up to 100% of the policy, up to 155,000 in this case. So it protects you from a loss of income if something were to happen to you. Okay, the next benefit I want you to write down is called critical illness. And then right next to it, write down 155,000. Critical illness, chronic illness. The first one is critical. The second one is chronic. I'm sorry, guys. Chronic illness. This is your 6 daily living activities. Every single day, you and I, everybody on this earth has to perform 6 daily living activities in order to stay independent. We have to feed ourselves, medicate ourselves, dress ourselves, toilet, bathe ourselves, and we have to be able to transfer, which is walking, getting in and out of bed, moving about. If you can't perform just 2 of the daily 6 living activities, you can withdraw up to 100% of the policy. So in this case, 155,000. Okay. I have a friend of mine that got in a bad car accident, and she couldn't perform 2 of the daily 6 living activities. Unfortunately, what happened was she got hit head on by a drunk driver, and the car flipped over. Her driver that was driving the car passed away. She didn't, but the car landed on top of her, and it crushed a lot of organs. She was in the hospital for 6 months, and she could not make any payments because she wasn't working. If you're not going to work, they're not going to pay you. But if she would have had this policy, it would have helped her sustain some income while she was in the hospital. Now, time out, guys. This is where I'm telling stories, because stories sell. You tell a story to somebody, they're going to relate it to their own life. And think about, I just told a car accident story. They're going to think about somebody in their life that had a car accident, and they're going to relate it to what happens if that was me, right? Okay, so back in. The next one, write down terminal illness. Terminal illness. If the doctor says you're going to die in 12 months or less, you can withdraw up to 155,000. So right next to it, write down 155,000. Okay. I have a friend of mine that passed away in 2018. He had a canker sore in his tongue. And he goes to the doctor and is like, Doc, I can't get rid of this canker sore. What's happening? So they test it for cancer, come to find out he's got cancer. They cut out half of his tongue. He goes into treatment and gets chemotherapy. 4 months later, he comes out, cancer went fine. He was fine. 2 months later, he goes back in for a checkup and come to find out the cancer went metastatic, meaning it traveled throughout his body. And 2 months after that, he ended up passing away. And so his wife, my friend, was left 4 boys behind underneath the age of 10, and he was 32 years old. Guys, this is a true story. I'm not making this one up. This is a true story. And if his wife would have had this coverage, she could have paid off the house and been able to stay in the house free of charge, just pay the taxes on it. But she didn't have that. So she had to leave to give the house back to the bank. They lost all the equity in the house and they had to move back to Arizona. So this stuff is real. The other thing that I want you to write down, the next line down, is called cash value. This builds cash value. What that's going to do is cover you for the rest of your life. And at the time your mortgage is paid off, you got 15 years on this. So at that time, you may have enough cash value in there to make some choices. Do I want to keep this policy? If you don't, you can surrender the policy, pull all your cash value in there, and you may have pretty darn close to how much you have in there or more. You may have made some money at that time because this is indexed with the market. Okay. If you want to keep it growing, you can grow that cash value and pull it out in loans tax free. You can use that to supplement a tax free retirement. Okay. The next benefit I want you to write down is called level premium. You've probably heard about those policies to where after 5 years, those policies goes up or the price goes up. That's because the carrier thinks that since you're older now, it's going to cost you more. And so that it should cost you more anyways. Here, that once America gives me the price and I let you know what that is, then guess what? That price is going to stay the same forever. And you're what, 49 right now. And so when you're 55, you're only going to be paying as if you were 49. So I commend you for doing this right now because the older you get, the more cost of insurance you have. Okay. So time out. You have a question, Sophia?
Yes, sorry. So for it says that you're doing the instant decision IUL. I was a little confused because I thought the IUL was different than like the mortgage term protection.
Yeah. So the IUL can be, remember, there's 4 types of life insurance products. There's your final expense whole life. Then you have your term, and that's just for a period of time for 15 years, 20 years, whatever, and then it ends. Then there is universal life, and then there's indexed universal life. Okay. Now you can use any one of those products as a mortgage protection product, right? Just in this scenario, the IUL is the best for the client only because it grows cash value. They have more choices. They can use it for different things. It avoids probate. It can pay off a mortgage if they die, right? And most importantly, it grows cash value for them. So later on in their years, they can look at the cash value and say, I don't need this policy anymore, surrender the policy and take that all that cash value and get a bunch of their money back. Rather than a term where they just pay in that's cheaper, it will be cheaper, but they just pay in every single month. And then at the end of 20 years, it's done. And then they lost all of that money that they paid in, right? So this particular situation, this is more valuable to the client because he has nothing wrong with them except for cholesterol. I think he can qualify for it and it's going to grow cash value.
And a typical like mortgage term policy, what would be if let's say they weren't in no perfect health, they had a few issues, what would be the one you would go for? The universal one?
Yeah, if I can put them in an IUL, I'm going to put them in an IUL every time.
Okay.
If they don't qualify for an IUL, then at that point in time, I would go to a final expense or a whole life, something that has lower coverage, but it's more lenient on the health issues, like maybe a Mutual of Omaha Living Promise, because they'll go up to 55,000. And then at that point in time, the way you structure it is you say, okay, your monthly payments are 1250. What this is going to do is it's going to buy 2 years worth of time so that Jamie, your wife, doesn't have to make that mortgage payment for at least 2 years. It's going to give her enough time to sell the house, fix up the house, fix all the repairs, and then put it on the market and be able to sell that without having to make a payment on the house, only on her income, because half your income is now gone. Okay, so if they don't qualify for the IUL, a lot of times I'm going to go with the final expense. Now, you have some clients that are like, I only want a term policy. I only want term. Okay, then you give them a term policy if they can qualify for it, right? The big deal is if they can qualify for it. Does that answer your question?
Yeah. So the IUL, the main issue is if you can qualify. It's not a monetary thing. It's just mostly a health thing.
Yeah, all of them are a health thing, right?
Gotcha. I
So
thought it was more monetary, like you have to put more into the premiums or something
yeah,
like
you usually on an IUL you do, because the way it works is, each payment that you make, a portion of that payment goes to the cost of insurance. It's what gives you the living benefits. It's what gives you the life insurance. It's what makes it tax free, right? The other portion of that payment that you make goes to an accumulated cash value account, which is like a fancy term for saying savings account. And that account is indexed with the market. So it grows with the market. It gives the ability for the person to protect their family, protect themselves, and grow their money in a product that they don't have to pay taxes on if they take it out in loans. Okay. Does that make sense? Now, if they can't qualify for it, you'll know that by asking the financial inventory questions. If they can qualify for it, write them an IUL all day long, because it's the best product for the client. Now, Americo and Mutual of Omaha and Ethos have a simplified issued IUL to where they'll tell you if they're approved right away. If you go with NLG, F&G, or Columbus Life, they have to go through underwriting to get approved. But they can get more coverage with that. They can get millions of dollars of coverage with those bigger carriers. Americo, the max they can get is 450,000. With Mutual of Omaha, depending on their age, the max they can get is either 250, 300, or I think it goes up to 350 with Mutual of Omaha. I'm not 100% sure on that one though. But those are simplified issue. That makes sense?
that. Yeah. Thank you.
Yeah, for sure. Okay, so we're back here. Now, I just built the value of the product, right? I made him, now on that piece of paper, if you guys have been following along, you guys should see a line item of, death benefit, 155,000. Critical illness, 155,000. Chronic illness, 155,000. Terminal illness, 155. Gross cash value, nothing but benefits, right? They see 155,000 probably 3 or 4 times on there, right? And that's what we want them to see, because the way people learn is through their senses, through our 5 senses. By me telling them, they're hearing it, but now by them writing it down, they can see it. And as they see it, now it sinks into the brain even better. Okay. So now what I'm going to do is I'm going to get into the pricing stage, and I'm going to price condition him. And I'm going to say, okay, are you
Yes,
still
sir.
there?
Yes, I'm here.
All right. So
I'm
let me
just doing
see.
things. I'm just
So
replying and stuff. So if you don't see me, I'm just replying and doing messages and stuff.
okay. So usually by this time they're like, well, how much does it cost? Right. And I'm going to say,
Right.
okay, let me get to the pricing stage here. Obviously I have it up here. Here's the pricing right here. But I'll say, okay, let me see what number they give. So for 155,000, ooh, man, I had a guy that was actually 65 years old that I got the same coverage for. He applied for 200,000 and he was paying about $400 a month. But for you, ooh, actually yours is only 155. or you can round it up and
Okay.
say you're 156.
156.
So yours is only 156. The only thing we have left to do is to submit a request to the carrier, or to finish submitting the request to the carrier. Okay.
All right.
All right. So timeout. You guys heard a bunch of silence there, right? Yeah. And you're like, okay, is somebody going to say something? The first person who talks usually loses. Okay. Now, alls I did was did a closing question. Once I did that, first of all, I want you guys to point out, or I want you guys to notice what I did before that. I price conditioned him. Basically, I got a big price out of the way by telling him I got somebody else covered at, $400 or whatever number I said. I can't remember. But the reason why is I want to get a reaction from him. He didn't give me a reaction. Some clients don't. But sometimes they'll say, "Oh my gosh," or they'll say, "Ooh, holy cow, that's high," or they won't say anything. Or maybe they'll say, "That's not too bad." If they Whatever they say teaches me what kind of reaction I'm going to get when I give them the real price. Because you guys get price conditioned all the time. You go to Target and you buy a shirt, the price tag may say 99 bucks, right? And then it's going to not put a slash through it and say on sale for 69. Then there's a red sticker on there that says today only 39 bucks, right? And that's price conditioning, and they're getting you to buy it. It's the same way with this, right? We want him to understand that normally they could be way up here, but your price for all this value is way down here. Now, here's the other thing I want you to know I pointed out. I told him that the price for the other guy was $346 or whatever number I said, I can't remember. But when I told him his price, how did I deliver the price? I said, it's only 155. Not 155, 155. Oh, yours ain't too bad. It's only 155. And then I just let it sit there for a minute because I'm waiting for a reaction from him. Now, he knows what I'm doing, so he didn't give me a reaction. And so then
Yeah,
I'm going to,
I was gonna
so
say
then,
that's why I didn't.
right, yeah. So then I'm going to close him. And the way I do that is I'll say, okay, the only thing we have left to do is to submit a request to the carrier. Okay. And he
Okay.
said, oh, right. So now I'm going to go on to the beneficiary stage. And when I say okay, I'm not going to say, are you good with that price? Are you comfortable with that? Is that affordable for you? That's a yes or no question. I just want him to agree with me. The only thing we have left to do is to submit the rest of the request to the carrier. Okay? Okay. He
Okay.
just agreed. Right. So now I'm just going to go right back to the beneficiary stage because I'm halfway through already. And I'm going to say, okay, we're at the beneficiary stage here. I'm assuming you want to leave 100% to Jamie if something were to ever happen to you, correct?
Yes.
Okay. And what is the date of birth of Jamie?
12/16, 12/19/78.
Okay. And then and she's your wife?
Yes, sir.
Okay. Spouse.
So far.
Okay. Now, do you want to add a contingent beneficiary? This would be somebody that the benefit would go to if Jamie died before you or at the same time as you.
Not at the moment. Can I add that or change that later?
Absolutely. You can give me a call anytime you need to. We can add that for you, or you
So
can
if my
call.
wife pisses me off and I want to remove her off the beneficiary, I can do that, correct?
Do that tomorrow if she's that bad of a wife.
Okay. Okay.
Okay, now we're at the banking stage here. Do you want it to come out of a checking or a savings?
Checking.
Okay, perfect.
When are they
And
going to take the payment out?
what's that?
When are they going to take the payment? I don't want to
Usually,
pay today.
Yep, no money comes out today. They can't even take money if they want to. It's usually once you get approved.
Okay.
Now, where do you bank at?
Chase,
Chase. Okay. And you want it to come out of a checking or a savings?
checking.
I did ask you that, but I didn't hear what you said. I apologize.
It's
Okay.
okay.
And you Chase Bank. And then what is so right now, guys, this is what I'm doing. I'm going to go right over here and I'm going to say Chase Bank routing number, Michigan. Okay, so it pulls up a routing number here of 072-000-326. Do you have something to verify that with?
That is a correct number.
Perfect. And then what's the account number?
123-456-78.
Okay, so I got 123-456-78. Let me validate that, make sure that's okay. Yep, that's perfect. And then, okay, I need to answer some agent questions here, and then I'll send you another text message here. And these are all just agent questions for you. You don't have to ask them these questions.
But do let them know, hey, I'm answering questions pertaining to me, like how I know you, how long I've been knowing you, am I the beneficiary, am I related to you? So I'm just answering those questions right quick. Okay. And they'll be like, okay, they understand, because you're going to take a few minutes to answer those questions. You don't want to be silent and they don't know what you're doing. So you just let them know that you are answering questions pertaining to you, the licensed person, that just how I know you, when I met you, and stuff like that.
Yep, you can do that. Or a lot of times I just say, okay, I'm going to take 2 minutes and answer some agent questions here. So you might hear some silence. Okay, I'm going to send you another text message here. Hi, them. And this text message, it's the same process. I just need that 6-digit authorization code. And this is your electronic signature saying that, yes, I would like to apply for coverage.
Okay, the number is 784-377.
784-377. Okay, perfect. Now we just scroll down to the bottom, click done, and then click I agree. And then agent agrees. You don't have to click this. Agent agree to terms and submit the policy. So now it's submitting. Now this time it could take up to 5 minutes. And so right now at this time I'm going to say, okay, hi them. It's submitting right now. And it's going to tell me right now if it's approved. See right here, approved as applied. Okay. So I'm not going to tell him that he's approved. Why? Because I want to call him back tomorrow and get another chance to talk to him. A lot of times overnight, clients get second thoughts. They sleep on it and they're like, well, I don't want to pay that much, or I need more coverage, or I shouldn't have applied. So this allows me to call him back. So what I'm going to do is I'll say, hi them, it's been submitted. What I'd like you to do is jot down my phone number. It's 402-253-5774. And if you have any questions, don't hesitate to call me. That's my personal cell phone number. And what I'll do is I'll give you a call tomorrow and let you know if you've been approved or declined. If they decline you, no big deal. We'll just pivot to another carrier and we'll find something to get you approved. I know this is important to you to protect Jamie. Does that sound okay?
Yes.
Okay, sounds good. Any last questions before we end the conversation here?
No, that's it. So you said
Okay.
you'll call me when you find out?
Yep, I'll give you a call tomorrow. If you don't answer, should I leave a message or just call you back?
No, you can call me back.
Okay, sounds good. You have a great night. Thank you.
You too.
All right. So that's how you run a mortgage protection presentation. Simple as that, guys. Now, I want to point out though, you heard him giving me objections. I want you to guys to understand, how did I handle the objection? I just answered the objection, I gave it a rebuttal, and I kept moving forward. I didn't talk about the objection anymore. I just answered it, I rebutted it, and I just kept moving forward. I asked the next question on the application, or I asked him a question, because the person that asked the questions is in control of the conversation. If you ever feel like your client is taking control of the conversation, then what you should do is ask a question. How do you do that? You just answer their question, and then you ask a question. And if you ask an open-ended question, then they're going to start talking, answering your question. Then you can ask another one, then another one, then another one. And those questions that you're asking is actually controlling the conversation. Okay. So we ran overboard. Do you guys have any last minute questions here? No? Super cool. That was like an hour and 40 minutes.
Wait,
But
I have one question. I'm so sorry.
that's okay.
So for the premium, I said it was like 155 or something like that. What if they wanted to pay more or less? Was there anything that could be done by that point?
Yeah, you can go back to the product page and change the amount of coverage, and it'll change the payment. Yeah.
Do you tell them all the way in the beginning that it's going to be 155, or do you wait until you've moved on, you've progressed with the application?
Everything that I just did on this is exactly how I do it. I don't let them know the price until after I build the value of the product.
Shannon, not to interrupt, I gotta go. We're
Okay.
good?
No problem. So
You're good?
normally, yeah, I'm good.
Okay.
Thank you.
Okay, thank you guys. Bye-bye.
Okay, so normally these aren't grayed out, because it's grayed out now because I submitted the request, right? But if you're still in the application and they haven't signed, then you can go back here to the product page. You can change this face amount right here, and it'll change the price down here. Okay. And so if they say, a lot of times what I'll do is I'll ask them, hey, this builds cash value. Sometimes I'll just ask them, what is the max you would want to contribute to this? And what's the minimum you can contribute to this? And keep in mind that the more cash value, or the more you put into this, the more cash value it's going to build. And sometimes I'll get people that says, I want to put in $300 a month. And so I'll type in, 155, and it says $155. Well, then I got to change it, and I'll say, okay, how about 300? I'm thinking to myself, put in 300. And if that's close to 155, or I'm sorry, if that's close to $300, I'll just tell them, so I can get you $300 worth, or 300,000 of coverage. And that's going to give you, that's only going to be 298 or whatever.
Yeah, and in the America one, it gives you the option when you're going in there where you can pick the face amount or what you want for the death benefit, but it's also got an option where you can pick the premium. So if they're stuck on like their budget focused and they're like, I can afford to spend $250 a month, how much coverage does that get me? With America, you can actually go through, put in the dollar amount that they're willing to spend on their premium, and it'll pop up the amount of coverage that they can get for it too.
Yep. So right here is the illustration part of it. So you can go in here. I got his birth date in here. He's male, non-smoker, right? It's IUL. So if you click on face amount, you can put in here $300, and it's going to solve it for the face amount, but it's going to base it off of the $300 amount that they want to say, or that they want to spend. Okay. So here's their $300 cost. This would give them 207,000 of coverage.
Got it. And the face amount is going to usually be the equity, what's left to pay of the mortgage.
The face amount is the death benefit.
But
So if their
it
mortgage
usually
is
matches the
150,
mortgage.
what's that?
I'm sorry, it usually matches the mortgage.
You don't have to. No. Again, we're just using a product to cover the mortgage. Now, let's say you have somebody that, is like, okay, builds cash value. How much can I put in? A lot of times you can even say, we got your mortgage as 155,000, but I do have some clients that like to max it out because they like the cash value aspect of it. And the more you put in, the more it grows cash value. And if you have the mortgage paid off or it's paid down, the extra can go to your wife or your kids to help them pay for a college education or something like that. It's all how you position it, how you say it, and what you say to the client, right? Maybe it pays off some credit cards. Maybe it pays off a car that they have. You know, that extra amount that you put in there can pay off extra things, not just the mortgage. And then if you get in a pinch and you need some money, you can actually borrow from it tax free. It doesn't cost you anything. It's your money. And so they'll say, yeah, okay, we'll do that. Now, if you want to run an illustration, let me show you this. This right here, click report. And then it's going to create one. Now we open the report and here's the illustration. Okay. Now you notice that I ran a mortgage protection appointment and I didn't even show them an illustration. All I did was talk about how much cash value it's going to build. But if they actually want to see what $300 will do for them, you can go down here and this will tell you this is the guaranteed rate, 0%. This is Armageddon. This is worst case scenario. That's why it's called guaranteed. Down here is an alternative scale. This means what if the market did 6.25%? Here's the death benefit, stays level the whole time. Here's your cash accumulation. So every payment that you make out of the $3,600 per year, $300 a month times 12, $1,949 is going to go to the cash value. This is how much you have left to borrow from. Now, the reason why it's like that is because your cost of insurance is front loaded in the first 5 to 10 years of the policy. Okay, so the cost of the death benefit, the living benefits, all of that, if something happens to you, America is under contract to pay $207,000. So the cost of that is front loaded in your right here. So if you were to surrender the policy at year 5, they'd still write you a check for $3,861, although you have $9,664 in cash value in it, because this is the cost of insurance for the first 5 years. Okay. Now this right here, the cool part about this is that America doesn't recognize a loan being taken out. So if you were to take out 2,000 from this, you're still going to be building cash value off of this number right here, even though some of this is still missing. So you're compounding interest on a larger number. Okay. Now this is the alternative right here. This is the current illustrated value, non-guaranteed. This right here is based off of what the market's doing now, and it's more proportionate of what everything is doing right now. Okay, so this is the one that I spend most of the time with for my clients so that they can understand what the cash value can really do for them. Okay, so after 10 years, they'll have 36,000 in there and they have almost 20 grand of cash value. And then by the time they're 73, they'd have 72,000 in there and then they have 58,000 of cash value after 20 years. So if he were to surrender the policy, remember, he's got a 15-year mortgage, right? He's got 15 years left to pay on the mortgage. So right here in year 15, he would have 36,000. Let's see, let's calculate it here. 3,600 times 5 plus 36,000. 3,600 times 5 plus 36,000. He'd have 54,000 into it right here, and he'd have 38,000 of cash value. So if he surrendered the policy, that's why it's called a surrender value. If he didn't want that policy, really, he's only got less than 18,000 into this policy because he's going to get 38,000 back. And for a policy that protects him 100%, full Cadillac policy with 100% living benefits and a death benefit, I mean, that's pretty darn good, for a 49-year-old, right? So, and then if he wants to keep building it, by the time he's 83, he'll have 100,000 of cash value that he can use and borrow and never have to pay back until he's dead. And it just keeps going up, and it covers him all the way to 120. Okay, so it's a whole life policy as well. So that's what the illustration looks like with America. And then these right here are the real indexing. right? This right here is your S&P 500. This is what happened over here, real time. In 1999, this is what happened. Right here, if you were to elect the point-to-point participation rate, then this is what you would have had deposited into your account in year 1999. If the market did 19.53, you would have had 16.79 deposited into your account. Here, if it drops -10 like it did in 2000, 2001, 2002, you'd have gotten zero. You wouldn't have lost anything. You wouldn't have gained anything either, but you would have lost nothing. And then right here, if you do the cap is 15.25 on this IUL. So if the market does over that, you get 15.25. But again, you don't lose anything when the market drops below zero. Okay. And so I explain that to them, and then they're like, oh, okay, I get it, right? Right here, this is a summary of 5 years, 10 years, 20 years. And then I don't know why they put 17 years in here. It's just kind of weird, but here's your low, here's your midpoint, and here's your current illustrated value. This is what you would have over 5, 10, 20, and 17 years. Okay, so you can show that to the client too. But that's really how you explain an IUL. And then right up here, here's your living benefits, right? If you have a critical illness, ALS, kidney damage, invasive cancer, major organ failure, a heart attack, a stroke, this is your critical illness. You can get up to 100% paid. And if any of these conditions last longer than 12 months, okay? Chronic illness, if any of these conditions last longer than 12 months, I'm sorry, for longer than a 90-day period, this is your 6 daily living activities. And then terminal illness, if you doctor says you're going to die in less than 12 months, you can get up to 100% of your policy. And all of it is right here. So I would suggest going into the demo app, kind of like what I have done. This is your summary page right here. Here's all your writers, and just play around with it. You know, plug in some numbers right here. Like plug in some numbers, see what it does. Draw an illustration. Change the numbers up here and see what it does and draw an illustration. And then read the illustration. Make sure you understand the illustration. Because the reality of it is the reason why people get afraid to talk to people and get afraid to do anything, get afraid to, present them, is because they're not prepared. If you got to get on stage and talk, you don't know what you're going to say, you're going to be pretty damn scared. But if you spend days and days and hours preparing your talk for half an hour, you better believe that you're going to be excited to get on stage because you know exactly what you're going to say in a half an hour, right? It's a different mindset. So prepare, practice the illustrations. And then once you jump on the phones, you'll be all right. You'll be good to go. Sound good?